What's up, guys? It's October 20th, 2023. We're going to do a breakdown of the E-mini. They had a pretty good... Bears made a lot of money today. Leg 1 and leg 2. It's pretty nice. Break and retest. Pretty good day. Yesterday we had FOMC and they gave us a nice double top into a downtrend. Here you can see the double top. And this was a good sell for the rest of the day. We made a new low at the last bar of the day, which is pretty rare. And today we opened up at the low, so we could see continuation or maybe a consolidation after a range. I think the chances are slim, or not slim, but the chances are less that we go straight up at the open, because yesterday we had a double top sell. So the market follows inertia. So we either maybe sell or range, depending on the market cycle, what it decides to do. First 6 bars of the day, not too much bullish pressure. We have a small doji. Bulls tried to reverse, so this could be profit taking. It's very small with a small bear body. It's a trading range bar. And bulls try and push up twice. 1, 2. And this one they do put in a bull body, but it gets taken out quickly. Bars 1, 2, 3, 4, 5. Bar 5. I saw this bar forming and it raced down and came back up. So maybe there were some stops and people were trying to cover their stops. We could do that break-even exercise just to see where they're at. Yeah, so if they entered here, see? If they entered here and then had some at the low of the day, if they had a limit like around the low of the day, then this bar right here, bar 6 wick, would give these bulls. From building out the previous video, we talk about trap traders and bulls that buy this high, buy more lower, and they get out for maybe a tick or two less, but they save their money if they buy lower and scalp out, which is pretty hard to do. Don't do that if you're learning how to trade, but that is how we see the markets moving, and what causes its momentum in one direction and whatnot is trap traders. In this scenario, the bulls were trapped at the high of bar 5. That's great for the bears. It already looks like a 2-day continuation. Breakout of today's low. You're getting steady selling. There's no bull bars. This is the first. I'm trying to focus on this trade right here. The first bar in a strong channel usually rejects, and that's because this could be seen profit taking pullback. It's a hard one for me to catch. I did take this trade, I think. And yeah, so it's a good sell. You know, it's a continuation from yesterday. Here's leg 1, because that's a pullback in the start of leg 2. Maybe this is leg 2, but we have to see what the rest of the chart looks like. First reversals in a strong channel tend to fail. So that's nice. Good job for the bears. They are putting a lot of bars below the EMA, and they're putting a lot of bars past... I'll talk about that later. I'll just say there's a lot of support on the left side here. That ruined my train of thought. Hold on. They're making it past. The bears are doing damage. They've almost reversed the whole bull trend is what I was trying to say. Delete this real quick. I was working on some plays earlier. So yeah, that's what I'm going to say is they're covering a lot of bull momentum. They pretty much reversed the whole uptrend. The last leg in a trend could be the first leg in a range. And we're just about at the lows of last week. We're a few points away. So here we are. First reversals fail. And they do get some momentum down, but it starts to become more of a wedge bottom. And we see 3 pushes. 1, 2, and 3. I need to see the measurements on this. So let's do the breakout. Okay, so if you shorted the high of the first reversal bar, you got your measured move to the tick with this bar. So this is a good 1-to-1 trade. You know, stop technically should go here, but with a new low being made, you could put it here or here, depending on how you want to trade. So that's a pretty nice one for the bears. If you miss the first breakout, you can still get in on the first reversal. And they sell into support. Whenever the market's selling, we're looking for support, and it's temporarily found. I wouldn't say this is a major trend reversal because the first reversals usually fail to the EMA. So we could maybe see this as a minor. For it to become major, it would have bulls would have to start taking out highs. So they'd take out this one, take out this one, take out this one, and take out this one in this type of fashion and start to make new highs. They'd close the gaps the bears are putting in essentially. Bears definitely want the price lower. Bulls are getting their two legs here, leg one, leg two. I think this is a good candidate for a long from a higher low perspective, and maybe your PT could be 50% of the downtrend. Let's see what the 50% level is at. So if you were to get long here, on the higher low, your first PT would be previous highs and then maybe 50%. And if bulls clear the 50% level of the downtrend, I think they're going to go for the breakout test right here. And if they do that, they're going to go for a new high. Let's see if they can. So we're kind of consolidating on the EMA. It's very shaky for the bulls. They get to the 50% level. Look, right when they tag the 50% level, huge bear bar. This is so spike in channel. That's Al Brook's terminology. And where was I going? Wedge top, 3 pushes up. 1, 2, 3. Reversal pattern lining up with 50% level of a downtrend and a strong sell bar. This is a lot of bullish momentum for the past hour, so maybe it would make sense to wait for a double top or a lower high because we know bulls are trapped here that bought this high. They're trapped right now. So they're going to need a relief, maybe a 50% level here. If they buy more, they get out the 50% level. When I say bulls buy here and they get out the 50% level, I am not talking about this one. I am talking about the 50% level of this bear bar because that's where sell orders are hit. So bulls will buy lower like this. I'm going to change this color. I guess we'll just do purple. Okay, can you guys see that? Make it a little thicker. So if the bulls that buy the high of this get trapped, they're going to buy more lower. And if they buy the EMA, this is their 50% level to get out at break even. So they get their 50%. They get it. If they buy more, I think a lot of bulls got trapped here, and that caused them to buy the EMA and a surge up. They get their 50% if they want to, or they get their initial, like they want this bar to happen here, so they get their 1 point on their first entry, make about 10 points on their second entry. And now that we see the price action, we know this is a bear trap temporarily, because bears see the 50% level. I guess they disregarded in this moment in time that the bull channel was stronger. Here we go. See? The bull channel. And all bull channels lead to a bear breakout, and all bear channels lead to a bull breakout. And if you'd have to like zoom in and out of the time frames to see that happen, but it's the truth. That's how the markets move within each other. They're all fractal, folding in and out like a kaleidoscope. So let's hit play. This is a strong bear. Okay, there's that market structure I was talking about. When I was saying instead of going short here, maybe wait for a lower high. This is the lower high that got put in. So I was a couple bars too early. Biggest bar late in a bull trend could be a sign of exhaustion. This is the nicest looking bar in this entire trend, and it happened late in the trend. So I think this could be an exhaustion bar, and it's happening around the 50% level. You can see that if you have your order one tick here, you don't even get filled. And the market slowly sells in this. It's a small channel, but it's tight. You see the bear channel, and then boom, bounces at the EMA, people maybe market ordered in, they buy more, they get out, and this gives the market bearish structure. A bear flag at the 50% level, a lower high. I think this is a good candidate for a short. Remember, all bull channels eventually break out into bear flags. Still testing. Another lower high. Broke the EMA. Now bears are putting in bear gaps. Remember, these are all gaps here. First reversal. I'm going to talk about that real quick. This is a tough trade. I got caught in this pretty badly. It's best to avoid barbed wire per Al Brooks. This is barbed wire. It's very hard to trade if you're trying to hit in. It's better to wait for the breakout, or the previous leg should have an influence on this range, and up until the 20th bar. And after 20 bars, the markets will go back to neutral on the 5-minute chart. So this is barbed wire. It's good to avoid it, but what we also have here is a bear flag double top on the EMA. I think that's a pretty strong sell. And not to mention, this is still part of the leg 1, leg 2, which we should throw the measurement on there. So this is like an extreme case. Maybe it starts right here. Or we could do I think I would feel more comfortable like a breakout of this. So it looks like this level could be our, okay, hold on. Maybe around this level, this blue box could be a PT because it's just around like the measurement of the first leg. I'm going to clean this up. Or a breakout of the previous range. Assuming the bears are going to keep selling. I think this was a pretty nice bull trap. If bulls bought this high thinking we're going to go higher as a double bottom, they have to hit out. The market didn't even go one tick in their favor, or they buy more at range lows, depending on what type of trader you are. And we sell, which is trying to make new lows of the day late into the day. It's not bears don't even get so let me delete this. So the leg 1, leg 2, I think it does work. Leg 1, and then it goes to the top here maybe. And from this perspective, it does work. So that would be how we find our measurement for this trade. There. That's a pretty clean picture of a leg 1, leg 2. Trying to make it. It's pretty clean PT, and what am I saying? Okay, leg 1, leg 2 worked for a new PT at the end of the day, or if you sold and held a runner, you would never get tagged at your break-even stop around the breakout point. It's pretty nice, you know. You can get if you miss this, you got your measured move here, or you can catch this higher low to the 50% level, which was this bar. If you didn't get out this bar, you got a second chance, a third chance, even kind of a fourth chance to get out around this high, the 50% level, and then start to sell for the last leg down. Bears also got a second leg down here. Different types of ways to measure second legs. We could say maybe this is leg 1, and it doesn't really work there. How about that from the start to the low? It's a little bit better. If we went to this bar, we wouldn't make it, but if we take it from the height of the pullback, you would get filled and with a little trickle. I hope you're not trading this late into the day on a Friday anyways. Could be dangerous. This could just rip up. But yeah, it was a good day. It's been a good couple days for the bears. The double top from yesterday is still selling off. So in 2 days, the bears made, where's my tool? 110-ish points, 109 points. That's good, you know. We'll see you tomorrow. Maybe we get a continuation. Maybe we range. Maybe it's an uptrend.